TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, we're going back here to the Diagnostic Trading Hour right here on TFNN. Don't forget, anywhere online, tfnn.mobi on your mobile phone, at home or not, you can listen in. Well, the markets are screaming today on that much better than expected U.S. GDP. Not usually a massive mover, but getting a 4% was way above anyone's expectations. We got the S&P screaming up. It's 14 points up today. We got the Nasdaq up 39 points today. Russell's up 18 with the Dow up 93 points on the day for a Friday. Not too shabby there. We got gold is currently up 7.5 points. We have silver up nearly at 1%. Copper is currently up almost 0.5%. Oil not moving real big right now, about 28 cents. And natural gas is actually flat on the day. Not something you see too often. We got corn right now just up a few ticks. We got soybeans up 13 points, up 1%. Euro dollar currently up 21 pips. Pound dollar down 22. Aussie dollar up 59. We have the euro yen is down 12 pips. We have the dollar yen down 17. Pound yen down 30. Dollar CAD is currently just down a single pip. And the dollar franc is down 29 pips on the day. So that gets, all things, all markets covered right there. You got your oils, your energies, your ags, your currencies, and your indices covered there. So I know where all those are standing. And let's go ahead and check out. Obviously, we're coming into, you need to be aware of, obviously you are aware of, the Christmas holidays and everything are right here around the corner. So what you want to do is be careful in how you trade. The reason is the volume drops significantly. It's already started to drop, and it, we had the big move today, but it's just going to, you have really weird sporadic volume, and it doesn't take much to move the market in the opposite direction in a heartbeat. And so, something to consider this holiday season, all right? Chill out, back off, demo trade, learn a few things. If you got some time off, check out Nadex, defined risk trading, okay? You need it for stuff like this where you have lower liquidity, and a lot of times you can have very high volatility coming up this coming week. So at the top over there on the TFNN homepage, click on the Nadex banner. To get a demo trading account, just go to trading. Go to Demo Trading Account. And under that, fill in your username, first name, last name, phone and email address. They'll send you a link for that demo, and that will get you going. Okay, so you can get started on that right away, and you'll be able to trade. What will happen is they'll send you a password in your email. You can log in right here at the top right side. Now, if you want to get a live account, just click on Create Account. It's only $100 to fund a live account. Obviously, if you're really going to be trading, you need to put more in there. But to get the live account going, just click Create Account. It takes about 5 minutes. Deposit $100, and if you place a trade, you can get that demo extended basically for life now. So there's some pretty cool stuff that's coming out, and you want to be able to hop in and check that out. And get your demo account, get going, try it out. This is a perfect time to do it. See, what kind of difference would it make? And I'm not saying, maybe you are trading, but maybe you try to do some trades side by side, okay? If you're buying the S&P, buying gold, buying soybeans, see, what would happen if I would have used Nadex instead of just, hopping in on what I have. So I do hop in on, whatever market I trade, but I also try to do a very similar trade over on Nadex. And sometimes that can seem a little bit confusing or intimidating because you're thinking the binaries. But what I want you to think about is not the binaries. What I want you to think about is looking at the spreads. If you're already a trader, go to the spreads. Okay, they're a lot more. How do I put this? It's just a lot easier to trade the spreads if you're already a trader. If you're brand new, you might want to start off in the binaries, get going there. But they're easy to understand. I would actually say they're harder to trade because you got to understand quite a bit more to really take advantage of them. But if you're already a trader, the spreads maybe take a little longer to understand, but they're a lot easier to trade because it's more like trading the underlying market. And to help you out with that, check out our scanner. You can get access to it right over here. You got a free trial with that as well. And not only does it have the box spreads, but it also, of course, has the binaries included with it. And sign up for that, get in there, and that'll help you with your demo. Okay, so sign up for both demos at the same time. Get started right away. And I talked about wanting to go in and put some of these pieces together. And so one of the things that you want to do is go, okay, let's say if I want to do an S&P trade, then I can go over here and choose S&P. And then I can scroll down and I see all these S&P contracts. And if I say, I think it's going up or going down. So, let's pull a chart up. Let's see what we got. And, see if we can maybe make a determination on a trade there. So we got soybeans actually bouncing right now off a settlement. But let's go in first and we'll just check out the S&P. See if we find something on that at this moment. And, okay, so let's say, it's moved up about a deviation. We got a volume spike pretty recently. Let's say you think it's going to pull back a little bit by end of day. People are going to take their profits off the big moves off the Fed funds rate. They're going to take their profits off the big move off the GDP. So you have a, short bias opinion on the market. Then, what can you do as a Nadex trader to take advantage of that? Or what can you do as just a futures trader to take advantage of that? Obviously, you could just simply go short. If you're going to go short, you got to, be aware of, obviously, a few things. One of those things is, risk. One of the most important things in trading. So you can go down here and you can go, what is possible for me to be able to limit my risk on these trades? And you can go, okay, well, I got a $50 risk trade. I got $51 risk trade. So you can look and to see. And by the way, new ones come up every single hour. It's like right here, at the end of this hour, new one's going to come up. We just now had, some 3 o'clocks show up on here. So right there's a 3 o'clock, contract that you can take advantage of to go short on with, low risk. Very, very simple, very easy way to do it. Now, other things, of course, you can hedge, and that's something I've talked about a little bit, not a whole lot, but I wanted to go into the hedge strategy a little bit right here. And let's say that right now you have a short opinion, okay? You're, bias, whatever, from however you read charts, whatever, magical method that you choose to use. And you want to go in and you want to go short the futures contract. Then how could you hedge this trade off, okay? So let's pull it up and let's talk about, hedging. And I'm going to open up. Already got the S&P chart. Let me open up a DOM real quick for the S&P, and then I'm going to show you how to actually put on a hedge trade and, all the factors you need to consider to do that. It's not really that complex. And if you have experience trading, think of this like simply, how do I put this? Think of this as if you were simply buying a put on a stock or buying a call when you're going short a stock, okay? Except for instead of having a low delta because you're waiting on that delta, it'll come up. Instead of having all those issues, you actually get to take advantage of having a very fast delta and having same day or even less than a day expirations. So the options are really, really cheap. And so we're going to look at 2 things. One is we're going to look at, okay, what happens if we go short? And then how do we hedge? So let's see here. Can I set this to, there we go. Good. Always on top right there. Okay. Now, if I wanted to go short the S&P, then I would need to buy spreads. So I'm going to go ahead and put the order on, and then I'm going to talk you through it. Okay, so that way we get it going. So I'll put in here, and I'm looking at my chart right now. We're going to go short once. We'll just say once the S&P breaks below a low of 1850.5. Okay, so I'm just looking at sort of like a little, what you could call, I guess, a mini support line. So 815.5, got a low right there. And we've had that low like 1, 2, 3, 3 bars across the board, 1850.5. So we're going to go in here and we're going to put a sell over on our S&P contract at 1815.25 and put that in. Okay. Once you do that, once you put that sell in, then we'll be waiting on the market to move. So now we're waiting on the market to get down to 815.25. We want to hedge it. So let's look at this. How do we hedge? Well, if you're going short and you want to put on a hedge, okay, if you're going short, you want to put on a hedge, then you need to go long on the spread. Okay? Does that make sense? Think about it. I want the spread to make money if the market goes up to cover the loss on my short future if the market goes down. So pretty simple, it's not rocket science. But then you go, well, how can I make money going down? If I got long and I got a short, how can I make money going down? Remember, the spreads have a capped risk. Okay? So they stop losing money at a certain point. All right? So literally, I mean, that's why it works for you, is because they literally stop having losses occurring because they have what's called a floor. And the floor in this case is 18.15. All right? So it won't lose any more than the maximum risk at that floor. Now, you're actually not going to be necessarily risking the maximum risk, okay? But you do need to really understand, how to put the pieces together. So let me pull up one more thing for you. I'm sorry, it's taking a little bit longer to open a couple of these things up. I may even just do this over in Thinkorswim. So if we go in and we put that on, then I got to figure out how many do I hedge with? That's my next question. Okay, like how many contracts do I need if I want to hedge my spread? And the reason to think about that is you need the right ratio. Okay, and to make this really simple, the scanner does this and makes it really, really simple for you. Every spread on Nadex has a tick value of $1. So, which is really convenient. So again, every single spread on Nadex has a tick value of $1. And so you need to know, what is that tick value? Well, we actually put that right there on the scanner for you. Tick value here is 0.1. Okay? So if the tick value is 0.1, meaning if it moved 10 ticks, that'd be a $1 move, right? Because it's ticking in dimes. So if the tick value is 0.1 and the spread moved a point, it would increase or decrease in value by $10. Okay, a 1 point move in the spread's price would be a $10 change for the US 500 spreads. Understanding that, what is a point value in the S&P? Well, it ticks in quarters instead of dimes. There's only 4 ticks, okay? So 4 ticks in $1, 4 quarters in $1. So right here, it ticks in 0.25. Every tick's worth $12.50. So if I take $12.50 and I multiply it times 4, I get $50. So if a 1 point value, okay, not tick, but 1 point value is $10 on Nadex, and a 1 point value on the S&P future is $50, then the simple math of how many Nadex spreads do you need to equal one S&P E-mini future on a point for point value? Well, 5, because 10 times 5 would equal 50. And so we know right there, and it even tells us, all this is worked out on every single Nadex contract. You don't have to try to figure it out. I mean, it's right there. Okay? And so now that we have that in place, we're going to put the trade on, come back, and we're going to walk through it step by step. So you're going to actually learn how to do hedges on Nadex spreads. There.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, like I said, I want to see it break that low that it's hit 3 times now and has yet to break. If it breaks that level, then that's ideally when I want to get into the trade, okay? Because the thing may just take off. So I don't want to hop in there, too soon, and I guess you could say regret doing it, okay? So we're waiting on the market to come on down to 815.25. I hope it will, just so we can put the position on. Let's just see how it works out. If not, I may just hop in just to, again, lay it all out to you. But either way that you want to do it, we can do that. I mean, you can do it now even if you think it's going to. But let me show you the power of this strategy. Okay, we just talked about how the S&P, if it moves a point, is worth $50. If a US 500 spread moves a point, it's worth $10. So we need 5 Nadex spreads to hedge 1 S&P E-mini future. Okay, and if we understand that, that's really half the battle, just getting that that ratio down correct. And then we go over here. And, I like to call these box spreads all the time. So let's look at, what kind of protection are we getting if we decide to do this? Well, this is an 815. Okay, so right here, 815. And let's add on a little time to our access. We'll add on, I don't know how we can get on here and actually still see the screen. I'm trying to keep it small. But we'll add on. Yeah, we can do that, and then we can just scroll backwards here. There we go. This thing can expire at 2 o'clock. So, knowing that it can expire at 2, what I'm going to do is I'm going to draw the rectangle on here from 1815. And let's say we get in, right here. And I'm going to draw it up to 1820, and then to 2 o'clock. Because, again, the spread will expire at 2. That means, my option will no longer be hedging me. Now, there are other ones you can choose too. This is just one of them. And, we could look at some of the other possibilities and why you might decide to do those here in a second. But right here, so a lot of times when traders get in, especially day traders, they're like, if it's not moving my direction within like an hour or so, I probably don't want to be in the trade anyway, right? But what would be your risk? If you go in and take this trade, where are you going to set your stop as a trader? What's most likely point that you would set your stop? I mean, you don't really want to set it in the middle of this. Like if we got triggered, would you really want to set your stop like at 816 right in the middle? Probably just asking to get stopped out. Most traders would probably think about putting their stop right, ideally like 817.25, just right above that market high, maybe higher. But so the closest that I think you'd want to put it on would be right about at that price level. And so since we got that and we got that going, I gotta watch just in case we get triggered over here. All right. So I got a few more ticks to go. If we do that, then what this is going to do is if I got in at 815.25, let's look at what the risk would be. Okay. And if I'm willing to wait up putting the spread in, I could be okay on that. Obviously I want to make sure my future gets filled. So if I go over here, that's why I have my ticket up and ready to go. But if I go over here and I got in at 15.25, and I got out at 17.25, one tick above the high of the day here, okay? Then my risk would be 2 points. Every point value is $50. I'm going to have a $100 risk on the trade, okay? And I'm going to be stopped out. So there's two things. One, if it does get up to that price, I will lose $100. The second piece is I'm out. It's not like I'm down $100, but I could still make money. I'm out. That's if I just sold the future contract at 15.25 and put a stop loss just 2 points away at 1817.25. With this method, okay, and if we just assumed the current pricing, okay, so we'll just go with that. I mean, it may be, it'll probably be a little bit better actually by the time it gets there. But if we just assumed the current pricing model that we have of what the spread is looking like it's costing here over at, 16.9, okay, and we got in the trade at 15.25, and we got out of the trade at, we'll go with the 18.16, so minus 18.16.9, okay. Now we have a 1.65. All right, so times $50, $82.50. Well, you're like, well, that doesn't seem like that's that much better. Now, sometimes it can be a lot better. Now, of course, you also could have a 3 or 4 or 5 point stop loss. So, but just with having a 2 point stop loss, we still have less risk. But the less risk isn't the best part of how this works. So we can stay right there. When we come back from this break, we're going to talk about why you actually this is like an incredible way to day trade. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, so we're going through quite a bit right here. I just want to make sure that you're caught up on what's going on. And what we did is I submitted an order for 1816.5. Right as it went down and it hit 1815.25. So it just busted it by a tick. All right? So let's go ahead and redo our calculations. And notice what the cool thing is, I had my order 1816.5, but I got filled again at 1816.3. So they actually, it's a limit order. They give you this price or better. Okay? So now let's look at what our real risk is on this trade. Well, if I went in and at 1816.3 is what I got filled at, or let's reverse that. 1815.25 minus 1816.3. Then I have, 1 point of risk. I go in times $50. So now my risk is $52.50. Okay, so we actually, by the time it got down to our entry price there, we took on a risk of $52.50. That is a 1 point, basically stop loss on the S&P. All right. So we have a 1 point amount of risk, whereas before, if we were just in the future contract, I think it'd be pretty agreeable that you could say, you know what, 2 points of risk was pretty realistic up here at 1817.25 if you're getting at 1815.25, so you don't get kicked out, if this thing just oscillates. So the most amount of money that I can lose on this trade now is simply $52.50, which is pretty sweet. Okay. My P&L will not fluctuate, and this is important, my P&L will not fluctuate much beyond that at all. Like, I may see it come up and down a little bit, but no matter how far this thing goes against me up to a certain point, and that's going to be a key here, okay, it's not going to hurt me. And so since that's really, not a concern of mine as I'm doing this trade, then I can go in and I don't have to stress out. Because what happens, right now, I mean, we all know this. You feel this as a trader. You go in, you sold at 1815.25, and, I mean, you can see it on the chart there a little bit. What's the first thing that happens to you? Like, oh, my God, it starts ticking up. Now we're 2 ticks down, And so now you're already feeling like you're losing money and, all that stuff. All right, so that stress of, okay, what am I going to do if this thing does go back up to 1817.25? You got to make that big decision, and it's not that far away, right? So if it's not that far away, then the possibility of having to make that decision soon is very high, and you have this heartbeat going on while you're doing this because you see this negative P&L. And so when you see that, it's it messes with you a little bit. Okay, so we're going to go over here, and I want to show you this. Up here. Where do we got it? All right, let's see here. Okay, so yeah, I'll just close this contract out to get it off the screen. Take the profit on that one. Okay, so we've done that, and it'll update. There we go. Okay, now I'm down $25 on this one, and I'm up right now, or down $12.50 on this one. Okay. Well, I got bid-ask spread and all that stuff I got to deal with. That's why I'm down on both sides. But let's do the math, okay? How much am I down? If I'm down $12.50 and 25, I'm down $37.50. Okay? If it goes up, it's just not going to matter. Your P&L is going to stay right at $50. And if you held this thing to expiration, then no matter where it settled, your risk, and here's why it stays at $30. Okay? Your $50. The risk is the difference. The risk is the difference between where you buy one and sell the other. So if I bought this at 1815.25, if I sold this at 1815.25 and I bought this at 1816.3, that is my risk on the trade. That's it. That's as simple as I can make it. That is literally your risk on the trade. It's the difference between where you buy and where you sell. And the scanner can actually help you figure this out pretty well, because one of the things that you can do on it is you can go in, and it's pretty cool. It's a little simple trick, but you can invert the underlying and the risk dollars. So if we're looking at the spread that we were looking at, buying or selling over here, then on any one of these, if you're trying to compare them, okay, you would simply go in and go, okay, whatever the underlying is, that's actually my risk. So the underlying proximity, so it says proximity to underlying. We used to call that break-even distance. I updated that because I confused people because they thought that meant like live, that they were down that amount. They had to move that amount before they were actually be profitable on it. But again, this is a trick, okay? If a trick meaning like a tip, I guess maybe a better word. If you'll invert proximity and max risk when you're doing a hedge, so like you're shorting the futures and you're buying the spreads, if you'll just invert the title, then you'll actually instantly get the math. So what this would tell me is right here that my risk is now 16 Nadex ticks. Remember, not 16 ticks. Remember, Nadex ticks in 0.1. So 16 Nadex ticks, which is 1.6 points, okay? $150 on that trade. On the trade we did, it was only $50. And my max risk actually, remember we were changing it? It's sort of what you could call my break-even distance. So $21, right there, that basically I'm going to have to make times $500. But I'm going to have to move 2 points on the S&P before I'm really making money, because I got to cover the loss of my spread, and that spread has to stop losing, so now the S&P can make money. So the S&P covers the loss of the spread by going down basically a point. And then by going to one more point, the spread's no longer losing money, and then at that point, I'm now making money. So if we put it over here on the chart to try to bring it all together and make a little bit more sense, pull this piece up, then what we can see, let's see here, is if I grab, I don't know if I want to do arrows, we might try that. Okay, first, doesn't matter where it goes, my max risk is $50 up to 1820. So this thing could lose, that gives me, what is that, 5 points? Just to verify we're right. 1825. Wow, I'm cutting myself short. Let me activate that. I didn't bring that up high enough. 1825. Here we go. All right. So, I actually have risk coverage all the way up to 1825. What does that mean? That means I have a 10-point stop loss, okay, with a 1-point risk. I have basically a $500 stop loss, but I'm only risking $50. So the S&P could shoot up to 1820, 1822, 1823 if by, expiration, whatever, it comes back down, I can be profitable. And my risk is not changing as we're going through this whole process. So like my risk literally is not going to be fluctuating dramatically, and I'm not going to have to be worrying about, how do I make the decision. I want to redraw it for where we put it at. How do I make the decision? Oh, do I get in or get out? Because that's one of the hardest things is you got to decide. Or how do I put this? Okay, do I get out of the trade right now? And if I do get out of the trade when it hits my stop loss of 17.25, if you're just trading futures, then what do? Do I get in again and take on more risk? Do I, probably lose again, maybe again, who knows? Do I sit on the sidelines and watch it go in my direction? Do I go, you know what, I'm just wrong, I need to go long. And then I go long, and then what does it do? It goes down. And you have to deal with that emotional decision, and you're sort of dealing with it tick by tick as a day trader especially. So you're having to deal with this whole emotional thing happening, and you're just trying to get to a point where you don't have to deal with the emotions. You can just sit back and do your trading, let your trade do its thing without having to really having to make those decisions. Okay? So by doing this, you don't have to make that decision. You said, my risk is $50. I'm comfortable with $50 risk. And if the S&P does decide to pull back 5 points, and I have to, give up, let's say, a couple of those, no big deal. That's easy. So let's figure out what is that break-even distance, because that's a big zone area you need to know. So you understand you get a 10-point, $500 stop loss, and no matter what happens on this trade, you're not going to lose more than $50. It is important to note that obviously your stop, your protection, stops at 1825. So if the S&P decided to do another monster scream and run up 10 plus points, you need to exit both sides so you could, get out at $50 because this spread is not going to make any money above 1825. So let's look right here and go, well, how do we figure out what our stop is? Or not our stop, but our break even. Well, to figure that out, the easiest way to do it is go, okay, well, what did I get filled at? I got filled at 1816.3. And then I go, okay, so what was my floor of the spread? This bottom part right here, this the bottom spread here. What was my floor? It was 1815, so minus 1815. So $1.3, okay, or move points, whatever you want to call it. That's how far I need the S&P to move down for me to really make money. So, what does that mean? Well, if I sold at 1815.25, I basically needed to move down, 1.3, so I'm just going to say 1.25 to make it easy. So minus 1.25. I needed to move to 1814. If the S&P will move to 1814, I won't lose my $50. After that, as far as like at expiration, I got to close whenever I want to. After that, it's pure profit after 1814. Okay? So all I needed to do is move down like 1 point and a quarter. And that shouldn't really be a big unrealistic thing considering you're putting your stop loss 2 points away. You should be okay with that. So I only needed to move 1 and a quarter to be able to be at break even on this trade. I can have unlimited profit after that because I'm in my future. Remember, some people don't like the spreads because they're capped and all that stuff and they're timed. And okay, well, if this trade hasn't really made any progress for us and, we got to make some decisions. But the one thing that we do know is that after the S&P gets right here, okay, right here at 1814, after it gets down to this level, we'll just draw a price level. will you actually start making money? And personally, as a trader, I'm okay with that, because what that means is I'm not risking more than $50. I'm not psychologically worn out as a trader. This is the first strategy I actually came up with, and it's still, I think, actually my favorite strategy on Nadex, because I'm a futures and forex and options trader. I mean, at heart. And so the first strategy I saw on Nadex, I'm like, wow, these are options for day traders, versus options for people doing longer term positions. And so I go in here, and because down 1840, I can make money, but in between now and then, like, if I make or lose $50, I don't care. If I do, I shouldn't be trading, especially the futures, okay? So, I mean, that's 1 point. So I can really put that trade on with, it's almost boring, which is sort of funny. Because as a futures trader, I mean, you're watching every tick, up, down, up, down, up, down. I'm up 1250, I'm down 1250, I'm break even. I mean, you're watching that P&L, and it gets your heart rate going. But if I can cap my risk at $50 on a trade, and know, what, I'm not going to lose more than 50, and it has to go all the way up to here, and if it does, I get out and I lose $50, okay? Or it has to get down to 1814 before I really am going to start making money. There's really nothing to do. There's no decision to make. There's nothing to worry about. I mean, a 10-point stop loss, you wouldn't have anything to worry about except for losing 10 points. But we're not going to lose 10 points. So we're going to make, basically 9.5 on the spread if it went all the way up, and we'd lose 10 on the, the S&P E-minis. Therefore, we'd net out, like a half-point loss. And so I hope it works. I hope it comes down. But if it doesn't, my risk is completely in check, and my reward potential is completely uncapped. Okay? Now we come to a certain point, because this will, happen. Let's just say, it's Friday. The market moved like crazy, and it's just not going to do anything for the next 2 hours. We are entering this. It's probably the worst time to give you this example, because we're entering like right at lunchtime. But, got to show you at some time, right? And that's the time the show is. So let's just say it does stay flat for the next couple hours. And the spread expires out, and let's say it's up here, and let's just say I may not even net a $50 loss, but let's just say I did net a $50 loss on the trade, okay? That's not really that big of a deal, okay? $50 in a trade for an hour or 2 hours or whatever that just did nothing. Most of the time, you're going to expect to lose more than that, and you're under a lot of stress for that period of time. Now, I could add on another spread if I wanted to. If I saw it prudent. I also could just decide to put, let's say we're down at 18, let's say we're like in the money a little bit. We're down at, say, just 14.5. Okay? And 2 o'clock comes. I no longer have a hedge because it expires out. I can add another one, but I also could just tighten my stop to break even and let the market do its thing and have the potential to actually, make some money. So it's not a bad thing that it expires out. And I'm going to talk about why I choose the short-term spreads when I do this when we get back. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so you're looking at this trade. Again, we got in right here at 815.5. If you're a futures trader and your stop's right up here at 817.25, your heart's like boom, 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 right? And I can't stress this enough. Doing so much trading myself, like your heart rate doesn't increase when the thing moves against you, because your risk doesn't increase when it moves against you. You know your risk walking in, and you know you don't have to make a decision if it does move against you. So, at least for 10 points. So you would just sit here sort of bored, okay? It takes up. Your situation isn't getting any worse. It just doesn't get worse as it goes against you. So you're just sitting there. You're letting the thing happen. If it starts coming down, cool. And so, we got like this big red line. That's where if you were a futures trader, you're out, okay? You gotta control that risk, which means you gotta get out. And whereas if you're over here and you're doing you're still a futures trader, okay? And sometimes people think trading Nadex means they're not trading anything else. You're still a futures trader, okay? But you're just hedging. You're just putting on some puts or calls. Nothing abnormal. People do it all the time, okay? Do it on stocks most often. And so we look at that and we go, okay, things ticking up. But again, my heart rate is not rising because what's going to happen, at worst by expiration, I'm going to be making the money on the spread, and And we'll see this fluctuate. You know, I sort of said like the risk isn't worse than 52.50. That's as of expiration. With bid-ask spread, you're going to probably see a little fluctuation, maybe of an extra $25 or so here and there. But what's going to happen is this thing, let's just say if it really does move up against us, all of a sudden you're going to see those spreads start making money like crazy. Okay? And they actually are positive now. So now we're at $5. You see it says 75. So you may see like this little $25, you know, variance or whatever on that $50. But I mean, you just wait like a second, it'll come right back together. But like if it expired out and we held this thing right to 2 o'clock, we're at the loss and we hit the button, then we're looking basically right at a 52.50 loss. Okay? So that thing's going, and I mean, you really are stressing, right? I mean, come on. If you're in this trade and the high is 18, you're 2 ticks away. You're 2 ticks away from being stopped out right now. What are you going to do? Are you going to get out? Are you going to try to move your stop? Are you going to try to analyze the DOM, the time and sell, to adjust your position? Are you going to double down, put on another position, and layer in and cost dollar average? So maybe if I could throw in a couple, 2, 3 more shorts, then I can bring my price up and get out at break even really easy. I mean, these are all games we play. If you've traded for any time, you played the games, okay? So if you go in and you do this, you're not making, I mean, you're 1 tick away. You can't tell me your heart rate is not higher right now. It's just, that's how it works. So with this, it's not. I still know I have $50 risk. Yeah, starting to make some money on the other side now, see? So it's going to pick up, and it'll go really fast because that premium will come out as we get closer to expiration too. But I'm not worried about it. Just let it go. But Futures Trader Guide, boom, boom. And if you can get rid of that in your trading, you're going to be so much more clear-minded. You're going to be such a better trader. It'll make such a massive impact on your trading. And, you know, so I hope you're, you know, picking up some of what I'm putting down here. And the reason I wanted you to show you the strategy is because with the liquidity being what it's going to be, you know, here over the next, you know, week, really, you know, week and a half, 2 weeks, you need to have something to help you out. And this is a really good time for you to learn this hedge strategy and spend a little time on it, mastering it. And yeah, I mean, you're a tick away. What are you going to do? You don't have to make a decision because you got Nadex spreads on. Just chill out and let it play itself out. Close it out at 2 o'clock if you want to, and take that $50 loss net total. All right, I hope you all learned something today. Definitely at least hedge in demo on the futures trades you do over the next week and just see what happens. And let me know if you have any questions. Y'all have a great day. Stopped out for the futures.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.